Who is going to be the real winner of the presidential election? Well, according to research, that answer is gold investors. However, gold mining investors should be cautious. Here to make that distinction for us is Ryan Giannotto, Director of Research at GraniteShares ETFs. Ryan, welcome back to the show. You've done research on this topic and you've looked at the last 50 years of gold price performance over the last many presidential election cycles. Tell us exactly how much gold has risen following the past Democrat victories versus past GOP victories.
Thank you, David. It's great to be back. Thank you for having me on. So what we've done is we looked at the past 12 election cycles. We actually have a fair amount of data since gold became a free-floating asset back in 1971. So we have the elections of Ford, Carter, Reagan, Bush won. Then we have Clinton, George Bush Sr., Obama, and Trump. We look at these 12 different elections, and we can actually get some pretty reliable patterns looking back into the past. While this election, is going to be, fairly remarkable in a number of circumstances, we can still get some reliable data. What we find is that initially gold observes a relatively muted response, but goes on to have a much stronger impact over the long term. So for instance, after 18 months of Republican victory, gold is up 25%. But, for the Democrats, it's up only about 11%. So initially, in the short term, gold does have an advantage with the Republicans winning based on past data.
And in your research, you've indicated that there is a switch after 36 months where gold starts to favor a Democrat government.
Exactly. Yes. It's really after about 36 months into an administration that gold really starts to benefit from an increasing level with a Democrat administration, increasing to 56% gain 3 years after an election with Democrats winning compared to only 37% with Republicans. And then if we extend this to the full length of the administration, gold gains a resounding 98% after 4 years with Democrats compared to only 34% with Republicans. And it's interesting to see how this sort of analysis compares with what we expect from sort of a popular imagination about what we think each party stands for. Generally we think of Democrats as, more heavy on the spending, more heavy on the taxing, less concerned about a strong dollar. And it's interesting to see how this plays out with gold's response, initially benefiting from a Republican administration, but over the long term, shifting much more so to the Democrats after the full 4 years. And yes.
Let's take a look at the first 24 months then. According to your research, gold rallied on average in the last 50 years, 30% in the first 24 months in a GOP victory versus only 20.8% over a Democrat victory. That's a pretty significant lead, a 10% gain lead. So why the significant favor to GOP candidates in at least the first 24 months?
Yes, it's a great question. What we see is that it just takes time for economic policy to filter through not only the political chambers, but also to really sort of reframe economic expectations. And nowhere do we see this more significantly than with inflation expectations, which really do change very slowly. So it takes time for expectations to filter through the market. And very rarely do we see, based on election policy, filter through immediately. It takes time, and really after, it's a slow moving journey to the materially higher gold prices, especially in the event of a Democrat win that we've seen in the past.
So if I can just summarize your research and correct me if I'm wrong, it seems to me that what you're saying is it doesn't really matter who wins. If your time horizon is long enough as a gold investor, either way you'll gain. Is that correct?
Yes, essentially. Which party has the golden ticket to the White House? Well, it turns out for gold investors, it's a win either way historically, because on average, we've seen gold prices go up 60% each 4-year period.
Can you still draw the same parallels to today's situation? We have seen really unprecedented events with the pandemic, the recession, shutdowns, monetary policy. None of these things we've really seen in the last 50 years. So can the same parallel still be drawn, Ryan?
If anything, I would expect a much more vigorous response from the fallout of this election, simply because of not only I think the result of the election itself will be different. how it filters out, how it's achieved. I think there's a real possibility there's a time delay before we actually know who's a winner. There's a case of what if there's a contested election. These are all unknowns. With normally the uncertainty, diminishes immensely after election. There's a case where the uncertainty only begins with the election here. But not only that, we're so far beyond the standard scope for what is, I would say, conventional monetary policy. The sort of the political appeal for hard policy, hard monetary policy, responsible money, that no longer exists as a voting bloc. So traditionally, we associate Republican Party more so with sound fiscal policy. That's not the case anymore. There's no party voting for a stronger, more responsible dollar.
We are recording this ahead of the election, so we don't know who's going to win yet. But according to your research, you've said that this performance has been pretty consistent. The 30% and 20% gains in the first 24 months, those numbers were averages. But offline, you were telling me that the performance has been pretty consistent throughout the various election cycles you looked at. It wasn't just the average. It's been a pretty consistent pattern, right?
Yes, it has been, and that makes sense over time. We looked at it; it's pretty consistent data that gold has reliably risen over time through various market cycles and various conditions. And that's what's so fascinating. As a gold investor, you're focused on the long term, and that's what the data showed here after elections.
Okay, so it's not going to be so much of a rosy picture for gold mining investors or mining investors at large. You passed me a note last night saying that after the election, the focus for mining companies is not going to be multiples preservation. It's going to be avoiding bankruptcy. That's a far cry from the bullish outlook we were just talking about for gold bullion. Explain to me what that means.
Yes, it's going to be a very, very tough event for the mining industry overall, whether in precious metals or diversified broad-based mining. If there is a full Democratic sweep, president and Senate. Because, we can take them at their word. They're going to try and effectively stranglehold these types of economic activity. We can really, the playbook here is what happened to the coal industry from 2008 to 2016. We saw massive loss of jobs, production cuts, and several of the largest coal miners, Peabody, Patriot, ARC, all, filed for bankruptcy and had to reemerge. And what we're going to see happen here is going to be very difficult for these companies to try and proceed. What we're going to see happen is almost an environmentally focused Dodd-Frank style regulation on lending to these companies, investing into these companies. We're going to see, large asset managers are going to be pressured into not owning these types of companies, miners specifically, in their, indexed investments. It's going to be, really, these are going to try and be made, sort of verboten type investments that the institutionalized world will not be able to touch. And that's what's really interesting, is that an outright ban isn't necessary to force these companies into bankruptcy. It's really just to strangle their access to capital, their access to investors, but also that's one hand. The second is direct regulation of their activities to try and make them be economically unviable. And that's really the 1-2 punch we saw with the coal, sort of playbook. Not only attack the coal producers themselves, but the consumers of coal. If you take out their consumers of coal, as we saw with the electric power plants, it also hurts the coal miners themselves. And it's really going to be an outright concerted push. This is what we would expect if there's an outright, blue wave sweep for these types of energy companies. It has profound implications for, gold versus the miners and the mining segment in general.
Why did you use the coal industry as comparable to the gold mining sector?
Well, yeah, exactly. This is where it gets somewhat ambiguous. It's a tough category overall because we don't know exactly how these levers of power will be pushed. But coal really is a very good analogy because it was targeted specifically for an environmental gain, for that ESG component. And it was just on the wrong side of the trade. These companies were forced into bankruptcy. But how is gold like coal? It's not so much that gold is like coal, but the process of extracting it is fundamentally the same. And it's this extractive sort of activities that will be direct in focus.
You wrote that the objective here is to choke off supply of capital in both equity and debt investments in these polluting industries. Could these choke off in supply, could that include tax raises?
Yes, it's going to be very difficult for institutions, banks to try and lend, for these companies to raise financing, whether by equity, whether by debt. It'll effectively be that these companies will be unable to access capital. And that's really what happened with the coal industry as well. It became prohibitive on so many different fronts to engage in economic activity. It was never an outright ban, but sort of I guess the financial system was weaponized against these companies.
Well, one of the concerns that investors have is whether or not the Democrats could raise corporate taxes specifically for this industry, thereby lowering their valuations.
But that's what's going to happen. It's not going to even be a matter of, try and preserve the valuation. It's just going to be try and survive until some sort of, divided government returns again. And, pressure will be relieved at least somewhat.
So I'm sensing you think that a GOP victory, a potential Trump reelection, could be more favorable to the industry. Is that correct?
Absolutely. Yes. Yeah. That will be one of the clear sort of emphatic outcomes of this election is what will happen, if there's a GOP victory with extractive industries, that's oil and gas, that's mining, it would definitely be a much more favorable environment. The Democrats are much more focused. We can hear, we can take Joe Biden at his word, for instance, with fracking in particular, but this will be extended throughout the industry of all extractive, sort of economic activity.
Now, you did also mention to me that COVID is still an ongoing concern. What exactly are investors worried about? Is it the potential of another lockdown, Ryan, or is there something else?
It's not so much the lockdown, although that is in itself a threat. We can only look to the other side of the Atlantic to see that's already a reality there. It could be coming here as well. But really more concern is its exhaustion of the pandemic, its fatigue of all these measures we've had to take in. You can get used to anything, but only for so long. And that's what the really great concern is. It's taking away the ability of policymakers to affect their own policy. Policymakers in the central government, state governments as well, are relying on compliance of the public. Without that, that's their most vital asset in terms of, combating the spread of the pandemic. It would turn into a classic, sort of the Fed is without ammo scenario, only with central government and, promoting public health policies. Without public compliance, they no longer have ammo at their disposal to fight the spread.
Ryan, thanks very much for coming on the show today. I appreciate your thoughts.
Thank you very much, David. Great to be on.
And thank you for watching Kitco News. I'm David Lin. Don't forget to download the Kitco Gold Live app for live charts, prices, and updates. Thank you very much.